Hello and welcome to Connect, the weekly podcast for the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I get to welcoming today's guest, I'd like to thank our 2024 President's Council sponsors. Now, these are a group of companies that have provided a tremendous amount of financial support for the California MBA, in large part so that we can continue to be that strong voice in Sacramento to represent the real estate finance industry before the state legislature and our regulators. So please join me in thanking our 2024 President's Council sponsors, and those companies are AmeriHome, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We truly appreciate it. And with that, I'd like to welcome today's guest, icon in the industry, someone I'm very happy to call a friend of mine, Wes Iseley with Carrington. Wes, welcome.
Yeah, thanks, Susan. Happy to be here.
I always like to get started with a little background. It's always an interesting story and how people got into the mortgage industry. So why don't you tell us how you got started?
Well, I think most of us that are in the industry did it by mistake, and I'm the same. So I graduated in 1981 from the University of Kentucky with a finance degree and had great visions of working in New York and what, such like that. But 1981, we're talking about interest rate, prime rate was 21%. Not a lot of opportunities, so I actually had a start in consumer finance. Which a lot of the old veterans like me, that's where they got their roots. And I started and you get hooked because if you work hard, you move up. So I moved 11 times in my 19 years in that industry. Most of those moves were early on where it was one troubled spot of the country to another. So I kind of loved it and got hooked. By age 30, I was a managing director. I had around 2,500 people reporting to me, and you saw everything. So I was hooked, and after that, it kind of prepared me for everything else I was going to do for the rest of my career. So fortunately, I had that upbringing. It was a nice mistake.
That's a lot of movement for the start of your career. So now I can get a little insight as to why you seem to know everybody and know a lot about this, many things about the industry. So that explains that. So we're at the start of a new year. Interest rates seem to be maybe stabilizing a little bit. What are your kind of expectations just overall for the mortgage market in 24?
Yeah, I think that when you talk interest rates and volumes and stuff like that, you got to take a look at what's predictions for what's the Fed going to do. So they're going to say 3 cuts. So it's the interest rate cuts, but it's also the spread between the 10-year and the mortgage rate itself, which is it's been at a historic high. So I think that with the 3 cuts that they're saying next year and with a shrinking spread, I kind of agree with what the MBA says. The MBA says that in the fourth quarter of 2024, you're going to see rates at 6%. And for the next 2 years after that, mid-5s. Once you hit close to 6, I think that's going to improve. I mean, for their volume, the MBA stats said, it's going to go from 1.6 trillion in 2023 to 2 trillion, which is 40% improvement after that. And 25 and 26, it's going to be about 2.5. So I think that's going to be a normal mortgage market, and everybody forgets normal after the explosion we had with the refinances. So I think you're going to see some continued M&A, in the industry. I think people are still going to have to probably sell MSRs instead of retain them for the most part. We're a big buyer of those, so I think it's an opportunity for our company. But it's going to get better. So I think that let's wait, but you're going to see slow improvement in 24 and more normal conditions in 25 and 26.
Anything's got to be better than 23, right? that was rough. That was a rough year. What do you expect the priorities will be for Ginnie Mae this year?
That's a good question. We're close to Ginnie. We're their default servicer since 2012. I think that with 92% of the MSRs held by non-banks now, there's always been a concern of counterparty risk. I think Ginnie's done a good job so far of monitoring that risk, because we can't have anybody fail because it's going to be more regulations for non-banks. So I think that's there, and I think they've done a good job, and the non-banks have too, preparing for that, and we kind of proved it through the crisis. And I think the thing they need to solve for is, for the long term, is the liquidity for non-banks with their knowledge and agreement, or look at options. And there's a couple options out there that the MBA is working with, and Housing Policy Council, HPC. And there's an EBO security, early buyout security, to kind of enable, provide liquidity for that. And then PTAP, which was their kind of crisis management in case anybody did it. Their MBA is kind of supporting, or people are talking about, is there a PTAP for non-default to provide liquidity to non-banks? So at least there's items being discussed, which I think is a good thing. So I hope those continue to maybe be discussed and maybe get a solution.
Yeah. Thank you for that. I know you've got a lot of insight with them. Switching gears back to kind of your career, in 2022, the 5-Star Institute honored you with their Lifetime Achievement Award for your amazing 40-year career. I was so excited to hear that news. How did you react when you heard that news?
I was surprised and shocked. Ed Delgado, who I'm really close friends with, called me and told me that, and I was honored. The next morning, he called me back and said, "Hey, there was a mistake, and I didn't get it." Then he laughed and hung up on me. But actually, as being a big supporter of 5-Star in the National Mortgage Servicing Association, which the top 40 servicers are a part of, and servicers are a close group. Compared to the origination side, servicers talk, think alike, and try to solve problems, where origination side's mostly independent. So seeing my peers in the past that got honored, I don't like the limelight like that. So it was a little hard for me to do that, but I was honored for all those years that I put in this industry of being selected.
Oh, that's incredible. That was wonderful. I was very, very, very happy to see that recognition for you. So Carrington has a great charity, Carrington Charitable Foundation. Can you give us a little backstory as to how that got started and some of the programs that you support?
So our owner, Bruce Rose, and his wife, Rosemary, wanted to give back and had a strong commitment to people that served, the veterans out there. So we started our first golf tournament, and since then, with our other fundraising efforts, have raised $26.5 million. With that 26.5, we take no expenses. Everything we do, that's pure money, and we pay for everything to raise that money. So it all goes to what we support. So we have just recently paid off 3 Gold Star family mortgages. So if the spouse was, there was a death, and we tried to help out that family by paying off their mortgages. We have 2 of the parties, other large non-banks, where we paid off the mortgages, looking to contribute back to the foundation. So, so I think that's positive. The other thing is the thing called the Honor Foundation, which we support. So that takes special forces people that, come out of the military, put them through training, and get them ready for civilian life. So we've hired 13 of those Honor Foundations, and we've talked to other major corporations and trying to expand that, so we can help these people transition who are great managers,
Right.
under discipline. And, I think that will help out the industry itself. So come out to the Carrington Charitable Foundation Golf Tournament, which is in October, early October. We have 240 golfers and 550 people for dinner. It's an industry event from people come from New York, from coast to coast. And we'd love to have it. We appreciate everybody's support.
I love it. I've always heard such great things. I've got to get myself out there to the event. Maybe this year will be the year that I make that, but congratulations, such incredibly worthy programs that Carrington is supporting through your charitable foundation. That's fantastic to hear. Wes, you and I have, worked together now for a few years as a member of my board of directors. You are on our executive board, and later this year, you'll be installed as the chairman of the board of directors. So I'm really looking forward to working with you in the coming year on the initiatives you'd like to see for the association. But can you talk to us a little bit about why it's important for the industry to support the California MBA?
Well, I think we all need to support and protect our industry. And the only way to do that is be a part of the California Mortgage Bankers Association and the MBA. And both those organizations work closely together for anything that threatens our industry and our customers. I mean, we just had the insurance issue where, because of things in California, insurance companies were leaving the state, and insurance commissioner were doing nothing to do that. You worked hard, brought in other associations, the realtors, bankers, and such, and we're working on relief of that. And if you wouldn't have the California Mortgage Association there to work with against, for what's good to protect our industry, nothing would happen. So I think if you look at that and you look at the RON, where California is laggard, we're working to get them to be a leader. CRA for non-banks. Every single year, things come up that would be bad for customers, bad for the industry. And if CMBA wasn't there with the MBA to fight these things, it could be a lot worse. I think it's up to everybody in the industry. You need to be a member, and you need to work to help support that. So I encourage everybody, and that's why I think we have a strong following in the state, because we do. I think we're the strongest association out there. And it's because of everything you do, Susan. So we appreciate that.
Thank you. Well, yeah, you definitely cannot let the advocacy efforts be left to somebody else. Somebody else isn't going to take it. You are the somebody else, right? So we've got to make sure that people remember that. Thank you, Wes. Thank you for being a part of our leadership. You're what helps make our organization strong. I love working with you. Thank you for being on Connect as well.
No, thanks for the opportunity.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect. Here we go.